Alan Thomson, founder and chief architect of Intervallum Technologies. You believe that financial advisors should move beyond basic portfolio diversification and embrace macro awareness. What exactly does it mean to become macro aware?
Yes, terrific question, Chris. Thank you for having me today. So, I guess as a baseline, I would point out that we don't believe that diversification is broken necessarily, but we do believe that it's incomplete. And to provide a complete view of diversification, we think it takes more than adding more products. And there's lots of products that uncorrelated that we can add to portfolios, but we think it takes one complete diversification goes one step beyond that, and that goes to the macro awareness that we're talking about, and how we do that. I think that was getting to your question. How we do that, we're essentially we're taking a microscope to two known things, to known quantities in the finance and economic world. We know that risk is not spread evenly through time, rather it tends to be concentrated. We also know that factor performance, so think that factor premium, think about momentum and quality and value and growth, that those premium are not static. They're cyclical. So we take the microscope. The microscope we use is advanced analytics, and we can see that there's a relationship between that factor premium and what we would characterize as that macro market risk, where those risk clusters. And so we're able to diversify through time by rotating factors.
Very interesting. So, for financial advisors who become macro aware, what are the potential implications of that in relation to their clients?
Yeah, great question. And really, my experience has been in the wealth management world, 25 years plus as a wealth manager, facing clients. And at the heart of the solution is really the behavioral errors that we make as a function of misaligned expectations. So let me unpack that for a second. So because we know that risk is concentrated in certain periods, it follows by rule, by necessity, that a static investment allocation will be misaligned with investor expectations. They will either be participating too little in the market in growth periods, or too much in the market during risk averse periods. And those misalignments are what create challenges between advisors and clients. And it also creates that's where behavioral errors creep in for investors, getting out at the wrong time, getting in at the wrong time. And that can really impact long-term plans. So what we see, so we in our our underlying model has been out of sample since for the last 10 years, so 2016 to current, and what we see is the ability to smooth the ride. So relative to the S&P 500, we're able to keep up with the returns, add a couple hundred basis points to the average annual return over the last 10 years, but do that with a lower standard deviation, lower drawdown profile. We're adding alpha through systematic rotation through the factors that we know, which ultimately does a couple things: helps clients reach their goals a little bit faster, with less a little bit faster with less angst along the way, and it helps strengthen that advisory relationship because clients see their portfolio adjusting to the macro environment, which is oftentimes what they expect.
And Alan, can you describe the full range of services that Intervallum provides?
Yeah, absolutely. So Intervallum Technologies, we're a technology firm, and we've built our intellectual property and offer that to asset managers to bring solutions, to bring macro aware solutions to the market in the form of ETFs, model portfolios, and direct indexing. So right now, advisors can find us on direct indexing platforms. So we've partnered with BX Partners, and that partnership allows advisors from across the country to find us on platforms that are close to them. And and then as a part of that, we'll provide our outlook and 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 data relative to the environment to help provide perspective. So the rules guide our index, but they also guide our commentary so that we can provide a consistent commentary for advisors to provide to their clients.
Alan, thank you very much for your time.
Chris, thank you so much for having me. It's a pleasure to join you and speak about this.